Welcome to the Credit Concept Podcast. I am your host, Credit Coach Nicole Scott, and in today's episode of the Credit Concept Podcast, we are going to be talking about building credit and how to build a credit score of 750 plus, because we all know how important it is to have a credit score over 700, but nowadays 700 just isn't quite enough. So as long as you understand the concept behind credit, you are going to be able to build a 750 credit score, because at the end of the day, you are the one that has control over your credit. You are the one that is going to dictate what your credit score is going to be. Again, as long as you understand the concept behind it all, you know what you're doing, you can create a game plan and take action. But if you don't start, you're never going to finish. And a lot of you guys want results fast, but I'm going to tell you guys firsthand, it does take time. Every situation is different, but you can't expect to go from, 500 to a 750 overnight. It just doesn't happen that way, because there's other factors that are being looked at in order to generate these higher credit scores. Now, of course, trade lines can help increase your credit score, because that is literally the fastest way to increase your credit score is to add trade lines to your credit profile. I have listed our list of trade lines in the description, so you can go to the description and you can view our trade line list, but you can also get a copy of our free credit building guide. And that's what we're going to be talking about today, because what you don't want to do is you don't want to add trade lines to a credit profile that has a bunch of negative information, or it has a bunch of collection accounts. That's going to be counterproductive here, okay? What we want to do is we want to add trade lines as kind of the cherry on the top. Once we have gone through disputing, we have cleaned up our credit, there's very minimal, if any, negative or derogatory information left on our credit. At that time, that's kind of the end, is, the final steps are adding these trade lines, so then we can leverage the trade lines and apply for credit in our own name and get higher limits and get better approval odds when it comes to credit. So without further ado, guys, let's go ahead and get started in today's podcast. Like I said, we're going to be talking about how to build credit. If you have not already by now, make sure that you have subscribed to the YouTube channel, Credit Coach Nicole Scott, because I drop videos every week, and the Credit Concept Podcast does have a new episode every single week. And if you have not watched or listened to all of the episodes under the Credit Concept Podcast, make sure that you have done so. You can get the Credit Concept Podcast wherever you listen to your podcast, and make sure that you have shared it on your social media platforms with your friends, your colleagues, your coworkers, and anyone else in your community or network that could benefit from understanding the concept behind credit. So let's go ahead and get started, guys. And again, this guide, this credit building guide that I have put together for you, is below in the description. It is free for you, because I just want to see you guys win. I want you guys to take action. I want you guys to have this information. I want to empower you to have the best credit score possible, because the best version of you starts with your credit. It starts with the foundation. And in today's world, the foundation is your credit report, is your credit score. It dictates so many avenues of our life, including where we live. It includes jobs. I know there's a lot of jobs out there that are looking at your credit report to determine if you would qualify to receive an offer. So there's so many different factors as far as, why you should take your credit serious. And, when we were growing up, this was not something that we were taught. This is not something that's taught in school. So there's no need to be ashamed or embarrassed about it, because who was out there teaching this to us? It certainly was not the school system, but yet when we turn 18, we're expected to, get a job, have a car, get our apartment, so on and so forth. But guess what? A lot of those things nowadays do require credit. And in order for you to get even into an apartment building, they sometimes require a certain credit standard. And a lot of those times they are at least a 700, at least where I live here in California. A lot of places require you to have at least a 700 credit score. So that can really hinder your ability to have housing in a nice area. Of course, housing in an area that's not the greatest is going to have lower standards. But, if you have good credit, it makes all of the difference. And I'll just tell you a quick story before we get started. I was helping one of my clients who works in a police department, and they were stating to me how, hey, I make more money than one of the admin gals that I work with. But yet the admin gal that I work with has a nicer house than me, and she has a nicer car than me, and her car payment is lower than mine. And guess what it boiled down to? Was credit. She was able to get a nicer vehicle because she qualified for a lower interest rate, which made her car payment much more affordable. And she qualified for a home loan with a lower interest rate. So it's not always about the amount of money that you make, but rather your credit score. Okay, so let's get these credit scores to the highest possible and continue to grow our credit scores over time. So let's go ahead and get started. And again, the free credit building guide is in the link in the description below. So please go ahead and get your free copy. And one of the first things that I want to touch on is the amount of credit accounts that you should have listed on your credit report. So when you are building a strong credit profile, it's really important for lenders to see your ability to repay back debt as agreed, because at the end of the day, that's all that they care about. And they want to see that all of these payments have been made on time. They don't want to see any late payments, no 30-day, 60-day, 90-day. They don't want to see any late payments. So it's really important that when you do acquire these credit accounts, that you are making sure that they are paid on time. Because when you start building credit, when you start getting approved for credit cards, typically they're going to be for a lower limit when you're first starting out. A lot of us will get approved for a $500 credit card from Capital One, a $500 credit line or credit card from Credit One. But guess what? These are just a test. It's just a test. And you will not believe the amount of people that I have seen literally fail the test and ruin everything for a $500 credit card. Okay, so let's rise above and understand the bigger picture here. Okay, and the bigger picture is houses, property, okay, money making assets, investments. Okay, you can never go wrong with property. And when it comes to buying property, your payment history is going to be top priority, because they want to make sure that you're financially stable and that you are going to pay your payment every single month on time. So in order for you to pass the test, you have to understand how to manage your credit cards. You do not need to use your credit cards every month, okay? When you get these low limit credit cards, you don't have to use them, okay? You can use them for a little bit of nothing, maybe some gas, maybe if you want to order takeout one night and put that on your credit card and then pay it off immediately. You never want to spend what you don't have in cash, okay? Keep that same concept. You need to treat these credit cards like they are your debit card, because this is money that you would have already spent on your debit card, but instead we're going to put this money onto our credit card and use our debit card to pay our credit card. So we can just earn credit from these small expenses that we have, like gas and groceries or any other expenses that we have to pay for. We can put those expenses onto our credit card and we can pay them. Now, keep in mind, when you have these low limit credit cards, it is going to affect you if you utilize a high amount of that credit limit. And that's really where the test comes in. They're going to say, hey, if we give you a $500 credit card, why do you need to use all of our money? Is there something going on financially that, maybe you're needing to use our money and you don't have money to pay it back, right? So this is simply a test. You never want to put a big balance on your credit card that you can't pay off in cash. And when you are putting your expenses on your credit card, you want to make sure that they're paid off like quick, like fast, okay? And you certainly want to make sure that they are paid off before they report to the credit bureaus. Now, the general rule of thumb here is your credit card companies are going to report your account data to the credit bureaus once a month, and they are going to report your account balance as of your statement date. Again, they are going to report your account balance to the credit bureaus as of your statement date, which is different than your billing due date. There's two different dates. There's the date that your bill is due to the credit cards, and there's also your statement date, which is going to be the last day of your billing cycle. And if you're not sure about this, you can just simply call the the credit card company, and you can ask them, what is my statement date? What is my statement date? You can make a spreadsheet and list out all of your different credit accounts and put the billing due date, what your statement date is. And then you can also go a step further and say, this is the day that they are going to update the account information to the credit bureau. So for example, I'll just use Capital One. Capital One, every card will have a different statement date. You might have several credit cards with Capital One, but each of those cards might have a different statement date. So whatever your statement date is, say for example, your statement date is the 20th. Capital One typically will report your information to the credit bureaus as of your statement date. So the information's not going to change. It's always going to report as of the statement date, whatever your balance is as of that statement date. They will report that information within 3 business days to the credit bureaus. And typically it will reflect those updates within 10 business days on your credit reports. So that's why it's really important to document these dates, put them in your calendar, put them in a spreadsheet, whether that's a Google list or some sort of Excel. Either way, document it so you have it and you can control your credit, because the concept behind this is you having the control, right? Don't spend what you can't pay in cash on your credit cards. And of course, when you get more experienced with this, then you can have a little bit of wiggle room, but it is very easy to allow yourself to spend what you don't have, okay? Especially when you have these larger limit cards, $30,000, $25,000. And I have literally seen people do it. They've gone from such a great credit score and a great opportunity to, build, and they mess it up over a credit card, okay? So we don't want to do that. We don't want to max out our credit cards. We want to make sure that we are managing our credit cards by paying them on time. If we do make a purchase that is for a larger dollar amount, we want to make sure that we've paid that prior to the statement date, or that we have balance transferred to another card prior to the statement date, so that balance will not report onto our credit report, okay? So again, guys, we want to make sure that we're managing our credit accordingly, okay? But we also want to make sure that we have enough credit on our credit profile. And there is what's called a thin file, right? A thin file means that, your credit score isn't the greatest because you simply don't have enough credit to show a lender that you are responsible. And to change that, you have to build an add more credit to your credit profile. And one of the questions that I'm often asked is, how many credit cards should I have? And to be honest, my standard answer is 10 plus, because if you have 10 credit cards or 20 credit cards and you manage them all properly and you're using them and paying them, and say for example you don't even use certain credit cards, it's still going to report as an on-time payment. So you're still allowing this card to just sit on your credit profile and help you build history and credit and on-time payments, and you don't even necessarily need to use it. And in fact, if you have secured credit cards, I don't recommend that you use those at all, because typically secured credit cards are for a very low limit. They can be, under $1,000, and as soon as you buy something, it makes your credit utilization shoot up. I had a client and they got a secured credit card to help them build credit, and it was for $500. So what did they do? They went out and they made a larger purchase. They put $450 worth of expenses onto the card, which made their credit score drop over 50 points. And they're like, why did my credit score drop? Well, because you got a brand new card, okay? And this is part of the test. You got a brand new credit card and it was secured. And then you went out there and basically maxed it out, which is a very big red flag, because they're saying, well, if you get a credit card with us, why do you need to use our money? And whoa, you're spending all of this balance. So you're maxing the card out and the utilization is sky high. We want to keep our credit utilization below 10% on our credit cards. And again, it's all based on what your available credit limit is. So if your credit limit is $1,000, rule of thumb, you never want to let more than a 10% balance, which is $100, report to the credit bureaus, meaning you can use it throughout the month, but you need to make sure that 3 days prior to the statement date that this account balance is under 10%. Because I did a test just for my own sake, and this was a couple years ago, and I allowed my credit utilization on one of my cards to go to 27%, and it dropped my credit score 90 points. So that was a huge hit that I had to take, because if you look up on the internet or anywhere, it says, oh, keep your credit utilization below 30%. Well, 30% is way too high. And again, this is all a test. You have to understand the real concept behind credit and how to play this game. If you don't understand how to play this game, they are going to eat you alive, okay? And you can play dumb with these creditors all you want, but you have to have this information. You need to. So the concept behind all of this is build credit to get at least 10 to 20 open lines of credit, and they need to be a nice mixture. You don't want to just get all credit builder loans like with Self or Credit Strong. You want to have a nice mixture of accounts to show that no matter what type of account it is, you can pay the bill on time. So there's installment loans, which are going to be auto loans, student loans, home loans, any sort of loan where you pay the same amount every single month until that balance is paid in full. And then there's going to be revolving accounts, which are your credit cards and store cards, and those can change from month to month. I do not recommend building with store credit cards until you have a little bit more discipline, because when you get approved for a store credit card, usually they are for a very low amount. And what does this do? It gives you, hey, I've got this credit card, so I'm just going to go put a bunch of clothes or products on my credit card. I got an Old Navy account. It's back to school time. Well, I guess that's the green light for me to go to Old Navy. I've got $1,000, so I'm going to go spend $500 on back to school. But you don't have $500 to pay that balance back, so that's going to drop your credit score. So you have to be smart about this. And again, that's where the test comes into play, because because they are testing you, all right? For the first, year or so, you're probably going to have a lower limit. And of course, you can always request limit increases because you can tell them that you're looking to make a larger purchase, even though we don't want you to, but you can tell them that because they, of course, want you to make larger purchases because that's going to equal more money for them because they're going to get more interest, right? But at the end of the day, our goal is to get higher limit cards, okay, and keep our credit utilization low and make sure that our payments are made on time. So a good mixture of accounts would be anything that would be, a few installment loans, right? Nothing over 4, I would say. You can have your auto loan, student loan, maybe you're doing some sort of credit builder loan like self-lender or Credit Strong or some sort of secured loan like the pledge loan from Navy Federal. That's a great way to build credit and the relationship with the bank. Those are all considered installment loans. So no more than 4. You can start with 2, but no more than 4. And then the rest are going to be credit cards. So 6 or more credit cards. I always tell people shoot for a goal of 10. Of course, you might not get approved for all 10 right away, but hey, I'm going to do a funding sequence, tonight, and I'm going to open up 4 different or 5 different browser windows, and I'm going to apply for all of these credit cards that I have strategically mapped out at the same time so I can potentially get all of these different cards and I'm not going to be affected. And that's okay. The only downside to that is, it will bring down your average history, but you can purchase trade lines to increase your overall history. And initially, when you add new credit lines to your credit profile, your credit score might go down. But over time, as you manage the accounts properly, pay the bills on time, and not exceed, 10% credit utilization, then you'll be just fine and your credit score will go back up. And it'll probably go up a lot more than what you lost because they're seeing that, hey, this person is responsible. They have the ability to repay back debt as agreed. And at the end of the day, that's what credit is all about. And that's what the test is. So between 10 and 20 open trade lines is our goal. And there's a ton of different options that you can choose from in the free credit building guide. And we talk about, how to purchase trade lines. We give you access to our trade line list. And we go over also what your personal credit data points should look like. We want, again, the 5 major data points that we're focused on when it comes to credit and obtaining a 750 credit score are number 1, payment history, making sure you pay all of the bills that report to the credit reports on time, even if it's just the minimum amount due. Number 2 is your credit card utilization. So making sure that any of your credit cards have a utilization under 10%. The lower the better. The sweet spot is really between 2 and 6%, okay? Because at this point, we're really trying to achieve that 750 credit score. And again, once you get there, you're going to have more wiggle room and at least you'll understand the concept behind it all. So sometimes you might be able to, take a hit if you're using more on a credit card. And of course, as time goes on and you get these higher limit credit cards, you putting a few $100s or a few $1,000s on your credit card isn't going to affect you because you have a $30,000 credit card. You have a $50,000 credit card. So you have room to work with. But when you're working with, some of these accounts just starting out like 500 or 1,000, it's a huge difference. Okay. So just understand the concept behind it. Number 3 is going to be the history, your average history. And the way that history is calculated is it's just an average. So they take all of your accounts and they go off an average. So the more accounts that you add, of course, your history will go down. But again, you can add trade lines where you can piggyback off off family and friends. The only thing that I recommend when you are piggybacking off family and friends is that you ensure that they have 100% on-time payment history, because you will inherit everything from their account, and make sure that their credit utilization is below 15%, because it makes no sense for someone to add you as an authorized user to their credit card if their credit card is maxed out or if they have a late payment. At that point, it's going to hurt you just like it's hurting them. So just make sure that you're being added to the right type of card. All of our trade lines that we offer have been vetted, and we guarantee that they will post, or we will replace it with the next best option. We guarantee exactly what is listed as far as the credit limit, the credit history, and so on. We guarantee all of our trade lines will have at least no more than a 15% utilization. So a lot of times it's lower than that, because again, these people are serious about their credit, and what's on their report is going to be what's on your report. Okay, you will inherit all of that account information. And then your total number of accounts, which is your mixture of accounts. And that's what we're kind of going over now. We want to have anywhere from 10 to 20 open accounts that are a mixture of, credit cards and installment loans. And we kind of went over, we want between 2 and 4 installment loans and 6 to 10 credit cards. The more credit cards you have that you can manage, the better. And again, you do not need to use your credit cards every single month. You do not need to put a purchase on your credit cards. However, you do need to make sure that you're making a purchase on your unsecured, meaning you did not have to put a deposit. So the difference between secured and unsecured is a secured card, you had to put a deposit down. So whatever your deposit is going to be your credit limit. Unsecured is you got approved and you did not need to put a deposit, and therefore you will need to make a purchase every few months just to keep some activity on there so they don't close your account due to inactivity. Because oftentimes if you don't make a purchase, and they do this a lot with Care Credit, if you don't make a purchase every 6 months or so, they will close your account due to inactivity. And sometimes they'll often pull your credit report and see if there's anything going on with you. If there is, they could potentially close your account, reduce your credit limit, so on and so forth. So you really want to make sure that you're setting yourself up for long-term success. That's the goal, long-term success, because even using a credit repair specialist like myself or anybody else out there, we can only do so much for you. We can lead you to the water, but we can't force you to drink. Okay. So, one of the other items that we're really focused on is the amount of inquiries that you have on your credit report. And these are all the data points that lenders really look at. They don't want to see that you've applied for a bunch of credit, but yet you don't have accounts with any of these places. What does that mean? They declined you credit. So it's not a good look. But if you have maybe 10 inquiries, but you have accounts with all of those inquiries, that's okay, because you applied for credit and inquiries will remain on your credit report for 25 months. And a lot of people say 2 years, which is correct. It'll be 2 years. But after that 24th month, it can take 30 days for them to process it, for it to be removed. So I always tell people inquiries can remain on your credit report for up to 25 months. And you can get declined for too many inquiries. I have literally seen it before from different clients that have come back to me and said, no, I got declined, and it's because they had too many inquiries in the past year. So we just have to kind of, work around that. And just because someone tells you no now, it's just a no for right now. It doesn't mean that we give up. I got told no several times with American Express before they finally gave me 5 different business credit cards. Okay. So just don't give up if there's certain cards out there that you want to get. And then last but not least is going to be the amount of derogatory marks that you have on your credit report. And even though derogatory marks aren't considered like one of the items that's calculated in your credit score? We all know it is. It's in there. And derogatory marks are collection accounts, charge-offs, bankruptcies, anything that is a negative that is affecting your credit score. Because I'll tell you, even taking off a collection account can raise your credit score tremendously. I've worked with, hundreds and thousands of people to help them with their credit. And I've seen where bankruptcies and collections have been removed from credit reports, and it's literally increased their credit score, anywhere from 20 to over 100 points. I had a client recently where we got a collection account removed from her credit, and it took her credit score up 123 points. So that's huge, and that's what we want to focus on, is just removing the negative items that are affecting you and adding positive items. Because in the past, maybe we weren't educated on how to properly manage our credit, which a lot of us are not, because it's just simply not taught to us. But now that we're educating ourselves, we can understand the concept of credit and what we need to do in order to be successful. Because you can go get approved for an auto loan or for a home with a 680 credit score and sometimes lower, right? But you're not going to get the best interest rates. And that's what it boils down to, is people often say, well, just don't buy things that you can't afford. Well, it's not necessarily that you can't afford it, but if your credit score was in a better shape, you would have a much lower interest rate, which means your payment is going to be much lower. And your credit score can be the difference of a 2% interest rate or a 22% interest rate. So that's a huge difference. And a lot of times people are so focused on just getting that approval. I don't care, I got approved, I'm driving off the lot, or I don't care, I got approved. You have to make good decisions, because whenever you get approved for something like a home or a car, it is a long-term commitment, and you're going to be paying this for years and years to come. And if it's not affordable, or if you're paying hundreds of dollars more because of your interest rate, that's a problem. And if you can get approved now, you can certainly wait and increase your credit score and work on your credit and get approved later and get a much better interest rate. So that's really what it boils down to as far as the data points. And of course, my ebook will break down all of these things for you. And then you just got to start building credit. The best way to build credit is directly with banks like credit unions that you have a relationship with. So if you have not already, make sure that you have opened up some bank accounts with credit unions of your choice. Navy Federal is very popular, but there are also a ton of other credit unions out there that offer some amazing credit products, and they are just as good as Navy Federal. And on my free credit building guide, I give you a list of all of these different credit unions that you can start building a relationship with. So it is just a great resource for you to be able to get information from and say, look, I know that maybe I don't qualify for a Navy Federal account, but I can get an account with PenFed or Alliant or, one of these other credit unions that are just amazing. So don't feel like just because you can't get a Navy Federal account, it's the end of the world. There's so many different credit unions out there. First Tech, NASA, there is State Department, Federal Credit Union, Teachers, Unified, the list goes on and on. And you can always Google the best credit union in your area. There are websites that you can go to, and I will drop a link below where you can literally look up credit unions that are in your area. And keep in mind, for all of the credit unions that I've opened up accounts with, I have never been to a branch. I do it all over the phone and online. So you can call them and open up a bank account right over the phone. You don't necessarily need to go into the branch because nowadays everything is, online and digital and e-signatures. It's not like the olden days. So you don't have to go to the bank. And it's best that you apply for your credit products online on their website directly after hours. So I had a client recently and I told him, just apply online, but he insisted on going into the branch and speaking with a personal banker, and he was able to get approved, but it wasn't for that much. And I was kind of disappointed because I feel like if he would have went online and applied on their website after hours where we're dealing with a computer system and just did it online himself, he would have got approved for a much higher amount. But an approval is an approval, so I'm not mad at that. We can always grow off that. We can always grow the credit limit over time, and that's the great thing about it. Once you've made a good relationship with them, you can request a credit line increase every 3 to 6 months, which is highly recommended for any account that you might have. So say for example your credit score is not the best, I also have a list of the best secure credit cards with credit unions, so that way at least you can start building credit and start getting some credit cards that are great banks that you can eventually get additional credit products with in the future. We also have our secret lenders list on this credit builder guide, and I'm telling you, this free credit builder guide is full of value. This probably has more information than what you guys have paid for from people in the past. So I do this because I want you to win. I want you to take action. I want you to take this serious as if you were paying me $1,000, okay? And feel free to leave me a tip because this information was not given to me when I first started, and my goal from the beginning of starting a credit repair and credit coaching business was to help educate people, because a lot of these credit repair companies, they simply don't educate you. You don't know what the hell they're doing. You don't know the process. You don't understand it. All you know is that they're repairing your credit. But what are they doing? You don't even understand the concept behind it. You have to understand, when you hire a credit repair agency, say like Lexington Law, what are they really doing to help you? The only thing that they're doing is disputing negative items to the credit bureaus, possibly the creditors, and they're not going to help you with anything further than that. So again, guys, some of the really good credit building products that I have used for not only myself, but for a ton of my clients in the past was Credit Strong, which is a $10,000, it goes up to a $10,000 primary trade line. And what a trade line is just a credit account that's in your name, and you can pay it off or close it and it will show that it's paid off. So it's a great way for you to build credit, especially if you don't have a lot of credit history, you don't have any installment loans or anything like that. Credit Strong is great. I would recommend getting the biggest account, which is going to be their Magnum $10,000 plan. And you can use the link because a lot of these links that we provide you guys with are affiliate links, which helps support our channel. It doesn't cost you anything, but what it does do is it helps support our channel so we can continue to put this type of content out there to help people build their credit. And of course, you want to make sure that you have credit monitoring. So I recommend Smart Credit if you're looking for a cheaper option, but if you're looking to get your real FICO scores, I recommend the My FICO app, because that's going to give you all of the different FICO scoring variations that you would need, because as you might know, the FICO scores, there's a ton of different versions. FICO 8 and FICO 9 are going to be the most common versions that people, or I should say banks, creditors are using right now, but FICO 10 recently came out as well. So if you haven't already started learning the concept of credit, now is the perfect time to do it, because you want to make sure that you are prepared for FICO 10, because they are going to be looking at the last 48 months of your history versus, FICO 8 and FICO 9, where they really just look at the last 24 months of your history. Okay. Credit One, that's a great bank to start, applying for a credit card with. And a lot of these credit accounts that are on my credit builder guide are not going to require a hard inquiry. So you can see if you're pre-qualified, and then once you accept the offer and they run your credit, then it's going to be a hard inquiry. But if you know anything about inquiries, we can always work on getting those removed before the account actually shows up on our credit report. So I'll leave that at that. Rent reporters. If you pay rent and you don't have your rent reporting to your credit to help you build credit, rent reporters will report the last 24 months of on-time payments to both Equifax and to TransUnion. And there's Credit My Rent as well, which you can get started with them, and they report rent to Equifax and TransUnion, and you can sign up for both of those accounts. So that would be two different trade lines. There's also Boom Pay, and there's a few other applications out there, and I'll leave the links in the description below, so that way you guys can, really focus on taking this credit building journey more serious. If you are not able to get approved for anywhere, like I've been denied credit from everywhere, you can get the credit builder card, which is in our credit building guide, and that's going to basically approve pretty much everyone. It is a secured card, so whatever you put as your deposit will be your credit limit. There's self-lender, which is considered, a credit builder loan. I don't recommend the self-secured card because it doesn't graduate, and we only really want to get secured credit cards with places where we can establish, maybe it graduating to unsecured, or establish a better relationship so eventually we can get better credit products from this bank. But, a lot of places that don't have that, it's like pointless. I'd rather go get a secured card with a credit union. But if you need some sort of installment history, self-lender is great, but I recommend Credit Strong. But say you need a couple, you can do self and Credit Strong. The only reason why I would pick Credit Strong over self is because they have those higher amounts, which help when it comes to, being able to get approved for higher amounts, because you always want to list higher amounts on your credit profile. And Credit Strong has that $10,000 plan that is just simply amazing. I've used it for myself, and you can open up multiple Credit Strong accounts. So you can open up one that's 10,000, one that's 5,000. They just have to be opened up 30 days apart from each other. There are a few different credit cards out there like Pedal, which you can do the Pedal 1 or the Pedal 2, and there's no hard inquiry to your credit score. They literally are a fintech company, and they will approve you based on, your banking. You just have to connect when you are applying, you have to connect it to your bank account, because it does kind of go off of, how much cash you have on hand. But it's a great credit card. It graduates over time. It's not secured. It's unsecured. So a lot of times I've had clients that have gotten approved for, $2,500 card. And again, you don't need to use them. Okay, you don't need to use them in order for them to report an on-time payment. They are just a test. If you do use it, you want to use it for something that you already were going to be paying cash for, that you can pay it right back. Okay. Another good one that's a fintech is Tomo, and Tomo is the same type of thing as like Pedal. There's no hard inquiry. It is a credit card. It's a MasterCard, and it kind of goes off of, your banking. So that's a great way to build up credit cards if you're not able to get credit cards with any anyone else. And again, we have a bunch of different credit cards on here that you can pre-qualify for without a hard inquiry to you. And then once you've been accepted, that's when they will actually put that hard inquiry onto your credit report. Another good secured option is going to be your Amazon secured credit card, because it does graduate, and I've put some additional information in the credit builder guide. Same thing with Discover. It has a secured credit card, and it will graduate after 7 months of you managing your account properly. And again, what does managing properly mean? Paying your bill on time, keeping your credit utilization below 10%, and you can always use more than 10%, but you want to make sure that it's paid off quickly, okay? And these credit cards are a great way for not only you to establish credit, but eventually you will be able to add your friends, your family, your children as authorized users. You can add them to Discover, Capital One, and some of the other cards out there that offer authorized users. So this is a great way for you to be able to kickstart your children's credit and be able to provide them with the credit education and the tools that they need to, establish a great credit score. Capital One is a great option. I recommend the Quicksilver card because it does have the cash back. Any card that offers rewards for spending your money, I'm all for. And we'll do another video on that, but this video is just simply to kind of get you kickstarted for those that are looking to start building credit and just have had a challenging time getting approved for things. There's eCredible, which is a great way for you to use with TransUnion and report things that you're already paying for to your credit reports. So you can use eCredible and you can add some of the utilities and other items that you pay for on a monthly basis and use that to build credit with TransUnion. Kickoff is another one that is really good. But the main thing when it comes to building all of these credit accounts is don't pay them late. I have seen so many people that have started establishing credit, building credit. They've got accounts like Self-Lender and Credit Strong, and next thing you know, they've made a payment late. So you don't want to overextend yourself. You want to pace yourself, okay? And you want to create a plan, and you want to make sure that when you open up all of these accounts, you're going to be able to make the payment on time, because Self-Lender is going to have a payment every month. Credit Strong is going to have a payment every month until you close those accounts. Once you close the accounts, your account balance will be zero, like you paid the loan in full, and you can cancel them at any time. But the concept behind getting all of these accounts and building credit is for creditors to be able to see your ability to repay back debt as agreed. So that's really the most important thing, is starting to build credit, starting to establish credit, starting to open up bank accounts with credit unions and banks that you can start building a relationship with and show your ability to repay back debt as agreed. And if you don't have any personal loans on your credit report, like student loans, car loans, or any sort of loan, I recommend using our personal loan to pre-qualify and get a loan so you can pay it off, okay? And what the concept behind that is just showing that, hey, I can take money, I can borrow money, and I can pay it back. But you're going to use that same money to pay it back, and you can pay it off early. Say you take a personal loan out for 12 months. You don't necessarily have to wait 12 months to pay it off, but you can make 3 to 6 payments and then have a zero balance and at least show, hey, I have the ability to borrow money and to pay it back, because that's what it's all about, is making sure that you are financially responsible to pay your bills on time, because it's just a test. And as long as you know how to play the game and you understand the concept behind credit, you're going to be just fine and you're going to win. You're going to pass the test. So again, guys, if you have found value in this podcast, make sure that you have shared it with a friend, share it on your social media page, share it on your Facebook page. make sure that you have subscribed on YouTube and tell a friend, because our goal is to provide you with value. And we have a tremendous amount of tools on my website. You can head over to therealnicolescott.com. And again, all of the links are in the description below. And you can also get a free copy of the Credit Builder Guide, so it will help you establish that 750 credit score that you deserve. Until next time, guys, I am your host, Credit Coach Nicole Scott, and I wish you the best.